The IMF has eased its forecast for GDP growth this year from 3.4 to 3.3%, and for next year from 3.6 to 3.4%. Still a decent recovery, or would be if it happens. This time last year, the IMF predicted 3.5% growth for 2019, but it turned out to be 2.9. As Yogi Berra said, it's tough to make predictions, especially about the future. Anyway, here's a graph of world GDP growth showing last year's drop and the IMF's forecasts for this year and next. The IMF also weighed in on climate change, saying it is already endangering health and economic outcomes, and not only in directly affected regions. But more pointed was a comment from the Bank for International Settlements, which is sort of a global central bank. And last night it published a book called The Green Swan: Central Banking and Financial Stability in the Age of Climate Change. And here are two quotes from it. The increase in the frequency and intensity of extreme weather events could trigger irreversible financial losses, and central banks may have to intervene as climate rescuers of last resort, or some sort of collective insurer. Onto the markets now, and the All Ordinaries had only its third down day this year, with insurers like QBE and Suncorp having a swan dive, while Woolworths hit $40 for the first time, and Coles went up as well. As discussed, the share market has taken off like a Bondi tram this year, but that has nothing to do with company profits, which are down. And that means valuations, which is what you have to pay for the profits, are sky high. The US market was closed for Martin Luther King Day last night, while stocks in Hong Kong, Tokyo and Shanghai fell. Oil and iron ore fell on commodity markets, and the Aussie dollar eased a bit to 68.6 US cents. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.